Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about EURUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so what hedge funds and the big players in the market are doing and how they're shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite strong, significant monthly support and demand area from a historical perspective, because this zone, in fact, was already tested and rejected to the upside in multiple occasions in the past, with only once the market managing to break below the area, but then anyway the market broke immediately back above the zone, went for the retest again, and got rejected to the upside again twice. Right now, we can see how we just had yet another test of the zone. The market has already started rejecting it to the upside. So in a situation like this, more bullish price action could be expected away from this area. So from a monthly standpoint, everything seems quite bullish, and there is definitely the possibility of seeing more potential bullish price action developing away from this area. Dropping down on the weekly time frame, what do we have? Now, from a weekly standpoint, it is important to notice what kind of structure the market is creating and what kind of patterns. The first thing that we have to keep in mind is that the market at the moment is currently shifting from a bearish structure to a bullish structure. In fact, we can see how we went from creating a situation in which we did have lower lows and lower highs to now having higher highs and higher lows. We had the first low here, higher low here. Now there is a possibility of creating yet another higher low and then a higher high, so higher than the previous one. We can also notice that we had obviously also a new higher high here and then another higher high here. So the next logical step would be the creation of a new higher high. We can also notice that if we look at resistance and support areas, we can notice how this zone was previous weekly resistance from which this red candle was created, which the market then broke to the upside with this impulse. And what we know is that previous resistance, once it is broken to the upside, becomes support. So the market is currently testing that previous resistance turns support, and there's good probability of seeing a potential rejection to the upside away from this area. We can also notice that since the market has created an impulse and correction, if we want to measure this correction after the impulse, we have to take our Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have a perfect 0.618 Fibonacci retracement lining up exactly with this previous resistance turn support, creating a confluence of support inside of this area. And when you have a confluence of support zone, you have an increased probability of seeing institutional longing inside of this zone. And we will be speaking about institutional longing in just a few minutes when we move to the commitment of traders analysis. But for now, let's drop down on the daily time frame and continue with our analysis. Well, from a daily perspective, we had already identified all this area as a confluence of support zone and an area inside of which we would expect a test and rejection to the upside, which is in fact exactly what the market did. And by the way, I will link in description that previous analysis so you can go and check it out for more free education. But at the moment, we have to identify how this area is the previous high. This zone is the resistance zone that the market needs to break to the upside if it wants to continue higher and follow through with the weekly pattern that we have previously identified. So let's go and see what we have when it comes to the commitment of traders and what the big players in the market are doing precisely on the euro. Now, if we're looking at the euro, we have to keep in mind that we are already looking at EURUSD because all currencies on the spot are traded against the USD. And in the long run, we can notice how institutions went from having a negative net positioning with minus 9.5K net positioning, so more shorts than longs, 173.8K shorts compared to only 164K longs, all the way up to now having a positive net positioning, so 81.4k net positions with the complete opposite, so more longs than shorts. This indicates how in the long run institutions have been shifting back to the bullish side for EURUSD. So it seems like they also expect a potential rejection to the upside away from that historical support. Now, let's keep that in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also linked in description, so you never miss new updates. Now back to the analysis. So from a daily perspective, we have to remember how this zone is resistance. Until the market will remain below this resistance, it can easily be rejected to the downside. However, if we get a break above the zone, that is where things get interesting, because if we get a break above the zone on the retest of the previous resistance turn support, that is where we have good probability of seeing more institutional longing, which at that point could further increase the probabilities of a potential rejection to the upside away from this zone. So if we do get this break and retest, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, at that point, I wouldn't be surprised to see a potential rejection to the upside, completing this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. Here, you have the possibility to gain access to the most complete, all-inclusive mentorship program that there is, and I have created this with all the effort that I could put into it. Directly, as soon as you open here the page, you will see a complete video presentation of everything included and how the entire program is structured. In it, you will find all my courses, the VIP Telegram signals, plus the video explanation. So essentially directly copied from my trading account. You will have the possibility to have one-on-one private mentoring directly with me included all in the program. The trading station software with the Telegram notifications integration. So a complete tool giving you everything that you need as a trader when it comes to the software that can assist you with your trading. You will also gain access to the COT data software, which is the one that we used in this analysis. And if you continue to scroll down, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the checkout process. So definitely looking forward to seeing you on board. The link is in description, and I will see you on your student dashboard. If you enjoyed the video, make sure to drop a like, and also let me know in the comments below for any new pairs or topics that you would like me to cover in my next videos. And I will see you in my next breakdown.